History doesn't repeat exactly, but it sure does rhyme. As uncertainty grows, the gold versus fiat debate is more relevant than ever. Which side will you choose? Gold's timeless value. Why gold has endured as real money. Throughout the annals of human history, few things have remained as constant as the allure and value of gold. From the earliest civilizations to the modern era, gold has been universally recognized as a symbol of wealth, a medium of exchange, and a store of value. While empires have risen and fallen, currencies have come and gone, and economies have transformed beyond recognition, gold's status as real money has endured. But what is it about gold that has allowed it to maintain this unique position for thousands of years? Let's explore the timeless value of gold and why it continues to be trusted, especially in times of uncertainty. The ancient origins of gold as money gold's story, as money begins in the ancient world. Archaeological evidence shows that as far back as 3000 BC, the Egyptians were mining gold and crafting it into jewelry, religious artifacts, and eventually coins. The first known gold coins were minted in Lydia, modern-day Turkey, around 600 BC. These coins quickly spread throughout the ancient world, becoming the standard for trade and commerce. Why did gold become so widely accepted? The answer lies in its unique properties. Gold is rare but not too rare, making it valuable but accessible. It doesn't corrode, tarnish, or decay, so it can be stored for generations without losing its luster. It's easily divisible, portable, and recognizable. These qualities made gold the perfect candidate for money, a medium that needed to be trusted, durable, and universally accepted. Gold versus paper. The problem with fiat currencies. Fast forward to the modern era, and the world's monetary systems have largely shifted to fiat currencies. Money that has value because governments say it does, not because it's backed by a physical commodity like gold. The word fiat comes from Latin, meaning let it be done. In other words, fiat money is valuable by decree. But there's a fundamental difference between gold and fiat money: scarcity. Gold is limited by nature. All the gold ever mined in human history would fit into a cube about 22 meters on each side. No matter how much technology advances, we can't simply create more gold out of thin air. This natural scarcity is what gives gold its enduring value. Fiat currencies, on the other hand, can be created at will by governments and central banks. When a government needs more money, it can simply print more. While this can be useful in the short term, such as during emergencies or to stimulate the economy, it comes with a dangerous downside: inflation. When too much money is created, the value of each unit decreases, leading to rising prices and eroding the purchasing power of savings. Gold as a hedge against inflation. History is filled with examples of fiat currencies losing their value due to overprinting and mismanagement. From the hyperinflation of the Weimar Republic in 1920s Germany to the more recent collapse of the Venezuelan bolivar, the story is always the same. When people lose faith in paper money, they turn to gold. Gold acts as a hedge against inflation because its supply is limited, and it cannot be manipulated by governments. When inflation soars and the value of paper money falls, gold tends to hold its value, or even increase in price. This is why, during times of economic crisis, demand for gold spikes. Investors, central banks, and ordinary people alike flock to gold as a safe haven, seeking to protect their wealth from the ravages of inflation. Gold's role in the global financial system. Even in today's digital age, gold remains a cornerstone of the global financial system. Central banks around the world hold vast reserves of gold as a form of insurance against economic instability. According to the World Gold Council, central banks collectively hold over 35,000 metric tons of gold. These reserves serve as a backstop, providing confidence in a country's financial stability and currency. Gold is also traded on global markets, with its price serving as a barometer of economic health. When uncertainty rises, whether due to geopolitical tensions, financial crises, or runaway inflation, gold prices typically surge. This is a testament to the enduring trust that people place in gold, even as the world changes around them. The psychological power of gold. Beyond its physical properties and economic role, gold holds a unique psychological power. It has been associated with wealth, power, and prestige for millennia. Kings and emperors adorned themselves with gold crowns and jewelry. Temples and palaces were decorated with gold to signify divine favor and prosperity. Even today, gold is used in medals, trophies, and awards to symbolize excellence and achievement. This deep-seated cultural and psychological association with gold reinforces its value. When people are uncertain about the future, they instinctively gravitate toward gold, not just because it's valuable, but because it represents stability and security in a world of change. Gold in the modern portfolio. For individual investors, gold continues to play an important role in diversifying and protecting wealth. Financial advisors often recommend allocating a portion of one's portfolio to gold or other precious metals, especially as a hedge against inflation, currency devaluation, or geopolitical risk. Gold can be held in various forms: physical bullion, coins, exchange-traded funds, ETFs, or mining stocks. Unlike stocks or bonds, gold doesn't generate income or dividends. Its value lies in its ability to preserve purchasing power over time. In periods of economic turmoil, gold often outperforms other assets, providing a crucial buffer against losses elsewhere in a portfolio. Conclusion: gold's enduring legacy. In summary, gold's timeless value is rooted in its unique physical properties, its historical role as money, and its ability to act as a hedge against the excesses of fiat currency systems. While the world has changed dramatically over the centuries, the fundamental reasons for trusting gold remain the same. It is scarce, durable, and universally recognized as a store of value. As we navigate an era of unprecedented monetary expansion, rising debt, and economic uncertainty, the lessons of history are clear. Gold's role as real money is far from over. When paper currencies falter and confidence wanes, gold continues to shine, just as it has for thousands of years. In a world where so much is uncertain, gold's timeless value endures, offering security and stability for those who seek it. The fiat currency cycle, trust, collapse, and the return to gold. Fiat money is the backbone of the modern global economy. The dollars, euros, yen, and other currencies we use every day are not backed by gold, silver, or any other tangible asset. Instead, their value is based on trust in the government that issues them and in the stability of the system that supports them. But history has shown time and again that this trust can be fragile. When governments abuse their power to print money, the consequences can be devastating. This is the story of the fiat currency cycle, a repeating pattern of trust, overreach, collapse, and the inevitable return to gold. What is fiat money? Fiat money is currency that has no intrinsic value. Unlike gold or silver coins, which are valuable in themselves, fiat money is valuable only because a government declares it to be legal tender. The word fiat comes from the Latin for "let it be done," reflecting the idea that money is money simply because the authorities say so. This system has certain advantages. It allows governments and central banks to manage the money supply, respond to economic crises, and stimulate growth. But it also comes with a built-in risk: the temptation to print more money than the economy can support. The temptation to print. Why would a government print too much money? The reasons are many: to pay for wars, fund social programs, bail out banks, or simply to cover budget deficits. Printing money can provide a short-term boost, but it comes at a cost. When more money chases the same amount of goods and services, prices rise. This is inflation. A little inflation is considered normal, even healthy, in a growing economy. But when governments lose control and print money recklessly, inflation can spiral out of control. This is known as hyperinflation, and it can destroy the value of a currency in a matter of months or even weeks. Lessons from history: Rome, Weimar, Zimbabwe, Venezuela. The cycle of fiat currency collapse is as old as money itself. One of the earliest examples comes from ancient Rome. As the empire expanded, the government debased its currency, mixing cheaper metals into its silver coins to stretch its resources. Over time, the value of Roman money plummeted, prices soared, and the economy suffered. The collapse of the Roman currency was a major factor in the decline of the empire. Fast forward to the 20th century, and the story repeats. In the aftermath of World War I, the Weimar Republic in Germany faced massive debts and reparations. The government responded by printing money. At first, this seemed to work, but soon inflation took off. By 1923, prices were doubling every few days. People needed wheelbarrows full of cash to buy a loaf of bread. Savings were wiped out, and the middle class was devastated. More recently, Zimbabwe in the 2000s and Venezuela in the 2010s experienced similar fates. In both cases, governments printed money to cover deficits and fund spending. The result was hyperinflation, with prices rising by thousands or even millions of percent per year. In Zimbabwe, the government eventually abandoned its own currency. In Venezuela, the bolivar became virtually worthless, and people turned to dollars, gold, and even cryptocurrencies to survive. The role of trust. What all these examples have in common is the breakdown of trust. Fiat money works only as long as people believe it will hold its value. When that belief is shattered by reckless government policies, political instability, or economic mismanagement, people lose faith in the currency. They rush to spend their money before it loses more value, driving prices even higher in a vicious cycle. This loss of trust is not just an economic problem, it's a social and political one. Hyperinflation destroys savings, erodes the middle class, and undermines the social contract. It can lead to political upheaval, social unrest, and even the collapse of governments. The return to gold. In every case of fiat currency collapse, people have sought refuge in something more stable. Throughout history, that refuge has most often been gold. When paper money becomes worthless, gold retains its value. In Weimar Germany, people who held gold or foreign currency were able to survive the crisis. In Zimbabwe and Venezuela, gold and US dollars became the preferred means of exchange. Gold's appeal in these situations is simple. It cannot be printed or devalued by government decree. Its supply is limited, and it has been recognized as a store of value for thousands of years. When trust in fiat money evaporates, gold becomes the ultimate safe haven. Are we seeing the same warning signs? Today, the world is awash in fiat money. Since the 2008 financial crisis, central banks have engaged in unprecedented money printing, known as quantitative easing, to prop up economies and stabilize financial markets. The COVID-19 pandemic accelerated this trend, with governments around the world unleashing trillions of dollars in stimulus spending. At the same time, global debt levels have soared to record highs. According to the Institute of International Finance, global debt reached over $300 trillion in 2023, far outpacing the growth of the world economy. Many countries are running chronic budget deficits, relying on central banks to finance their spending. So far, inflation in most developed countries has remained relatively low, but there are signs of strain. In 2021 and 2022, inflation surged to levels not seen in decades in the United States and Europe, driven by supply chain disruptions, energy shocks, and the after effects of massive stimulus programs. Central banks have responded by raising interest rates, but the underlying vulnerabilities remain. The fragility of trust. The current system depends on the continued trust of the public and investors. If that trust is shaken by political instability, a loss of confidence in central banks, or a new financial crisis, the cycle could repeat. People may once again seek safety in gold, real assets, or alternative currencies. Some analysts warn that the sheer scale of money printing and debt accumulation is unsustainable. They point to the lessons of history. Every fiat currency, sooner or later, has failed. The US dollar, as the world's reserve currency, is seen as uniquely strong, but it is not immune to the forces that have brought down other currencies. The digital age, new forms of money. In the 21st century, the fiat currency cycle is taking on new dimensions. The rise of cryptocurrencies like Bitcoin is, in part, a response to fears about fiat money and central bank overreach. Bitcoin, like gold, is limited in supply and cannot be printed at will. Its supporters see it as digital gold, a new form of money for a new era. Central banks themselves are exploring digital currencies, but these would still be fiat money, subject to the same risks of overprinting and loss of trust. Conclusion: the cycle continues. The history of fiat money is a history of cycles. Trust, overreach, collapse, and the search for stability. Each time the pattern is the same. When governments print too much money, trust breaks down, and people seek refuge in gold or other hard assets. Today, with record money printing and rising debt, the warning signs are flashing once again. While no one can predict exactly when or how the next crisis will unfold, the lessons of history are clear. The fiat currency cycle is not just a relic of the past. It is a recurring feature of our financial system. And each time the cycle turns, gold stands ready as the ultimate store of value, waiting for those who seek safety in uncertain times. History doesn't repeat exactly, but it sure does rhyme. As uncertainty grows, the gold versus fiat debate is more relevant than ever. Which side will you choose?